Thank you for joining us this Friday, the 14th of November. I'm Sophia with Bell Direct. This is the weekly market update. Well, commodity prices have been driving markets this week. We've seen strategic metals driving the energy transition, infrastructure securing bulk exports, and a crucial signal from the world of precious metals, all pointing to a market that's grappling with future supply. The headline remains the evolution of copper as an official critical mineral status in the US. This designation isn't just a label, but it signals a fundamental recognition of copper's role in the clean energy economy, as it's the metal that rewires net zero goals. Applications like electric vehicles and renewable energy grids require up to 5 times more copper than traditional systems, pushing global consumption on track to nearly double by 2050. However, this unprecedented demand is colliding with a constrained supply, with experts warning of a potential 10 million tonne shortfall by 2035 due to slow mine development and geographically concentrated production. Now, the new critical label is translating national security concerns directly into market pricing as strategic stockpiling via commercial means increases. Copper futures climbed back to $5 per pound, reaching a one-week high as risk appetite strengthened amid optimism that the US government shutdown may end soon. Now, while the world focuses on the future supply of energy transition metals like copper, we're seeing parallel billion-dollar action being taken to secure the stability of estimated bulk commodity exports. Away from strategic metals, BHP announced a $1 billion infrastructure plan for its iron ore operations in Port Hedland in WA. And this quest for reliability extends to the traditional safe haven metals, where the gold-silver ratio is providing investors with key insight into relative value and market sentiment. The gold-silver ratio is simply how many ounces of silver it takes to buy an ounce of gold. And gold and silver prices have continued to surge this week, with the ratio dropping to 80 to 1. Investors can trade the ratio by hedging one metal against the other for profit. And as the known safe haven metal, we've seen a lot of buying into gold this month. Thinking about silver, it is heavily relied upon for industrial demand, particularly electronics. And this industrial link, which accounts for nearly 50% of its demand, means that if economic or speculative sentiment improves, then silver is poised to outperform gold, leading to ratio compression. Now, this link directly links back to the copper story, highlighting that the entire market is sensitive to the industrial rollout and supply needs of the energy transition. And moving on to oil, well, crude oil fell toward $58 per barrel on Thursday, extending an over 4% decline from the previous session to reach a 3-week low. That was after OPEC signaled a well-supplied market outlook. Now, OPEC said that global oil production is expected to align with demand by 2026. They're revising its earlier forecast for a deficit and noted that supply already exceeded demand in Q3. And that's the commodity report for this week. Now let's look at the market's performance this week so far. We've seen materials and energy sectors in the lead, while information technology and financials weighed down on the market the most, bringing the ASX 200 0.82% in the red Monday to Thursday this week. On the ASX 200 leaderboard, Liontown Resources, IGO and Pilbara Minerals have made impressive gains between 27 and 38% this week, as China's new lithium royalty framework increased costs by $20 to $30 per tonne for domestic producers, therefore lifting the global cost floor and boosting Australian miners. Meanwhile, DroneShield was the worst performer after the CEO, Oleg Vornik, sold his stake in the company, $49.5 million in shares. As for the most traded stocks by Bell Direct clients, these were CommBank, L1 Group, Macquarie Group and ANZ. And clients were taking profits from Pilbara Minerals, NAB, BHP, Westpac, Min Resources and Wesfarmers. And the most traded ETFs by our clients were the Vanguard Australian Shares ETF, the iShares S&P 500 ETF, and the BetaShares Nasdaq 100 ETF. And to end on economic news items to watch out for next week, well, the RBA's latest meeting minutes are out on Tuesday. The wage price index is out on Wednesday, and on Friday, the S&P Global Manufacturing and Services Flash PMI will be out for November. Now, that's a forward-looking estimate of the final PMI that will be released the week after. And that's all for this week. I'm Sophia Mavridis with Bell Direct. Have a great Friday and happy trading.